Attention veterans, tax season is here, and it's time to lock and load your financial strategies for 2025. Let's secure those savings. Filing for taxes doesn't have to feel like marching into unknown territory. With the right intel, you can navigate it like a seasoned commander. In this video, I'm breaking down 8 critical tax tips every veteran needs to know in 2025. These strategies can mean more firepower in your budget this year. And the final tip, that's the game changer you don't want to miss. This video is for informational purposes only. Always consult your financial officer, or in this case, a tax professional, for specific advice. Tip 1, claim your military retirement pay tax exemptions. You've earned your stripes, and now it's time to cash in. States like Texas and Florida are widely known for not taxing military retirement pay. But let's talk about some less obvious ones. Michigan, Wisconsin, and Pennsylvania, which also give full exemptions. In states like North Carolina, you can exclude up to $25,000 of retirement pay if you're 55 or older. But heads up, some states require you to submit intel, like specific forms or applications, to activate these exemptions. Don't leave your benefits sitting in the FOB, in that forward operating base. A battle buddy of mine, stationed in Illinois, had no idea he needed to file paperwork to get his partial exemptions. Once he did, he saved over $2,000 annually. Tip number 2, deduct VA-related medical expenses. Medical expenses can sneak up on you like an ambush. But did you know you can deduct unreimbursed medical costs exceeding 7.5% of your adjusted gross income? Even with the VA covering some expenses, out-of-pocket costs like dental care, vision, co-pays, and even transportation to non-VA appointments may qualify. And if you've invested in home equipment like wheelchair ramps or stair lifts, keep those receipts. They're part of your operational readiness. A vet I know thought it wasn't worth tracking small expenses. By the end of the year, he realized he'd spent over $1,500 in co-pays and travel costs. That deduction was a game changer. Tip number 3, utilize the Earned Income Tax Credit. The EITC is a force multiplier for eligible veterans. In 2025, families making under $59,478 could qualify for up to $7,430 in credits. Single veterans might qualify for smaller amounts, but every bit helps replenish your supply. This credit applies even if you don't owe taxes. It's direct reinforcement for your bank account. One of my squad mates, transitioning into civilian life, thought he didn't qualify because of part-time work. After filing, he received a $3,000 credit, enough to cover a PCS move. Tip number 4, maximize contributions to tax-deferred accounts. Think of tax-deferred accounts like your supply depot. They secure your future while giving you immediate tax relief. For 2025, max contributions are $22,500 if you're under 50 and $30,000 if you're over 50. Every dollar contributed to TSP, 401k, or an IRA lowers your taxable income and builds your war chest for the future. When I first started contributing to my TSP, it felt like a drop in the bucket. But seeing the compound growth over time, that's when I realized it was a tactical advantage. Tip number 5, don't miss the Military Spouse Relief Act benefit. If your spouse works out of state due to PCS orders, the Military Spouse Relief Act lets them stick to their home state for taxes. For example, if you're stationed in California, but your home state is tax-free Texas, your spouse can save thousands by avoiding California's high tax rates. A fellow soldier spouse was overpaying for taxes until they realized they could claim their Texas residency. That extra $4,000 went straight into savings. Tip number 6, deduct moving expenses for PCS orders. PCS moves can feel like a logistical nightmare, but many of those costs are deductible, like lodging, transportation, and even shipping your gear. Think of it as mission-critical support for your next post. Tip number 7, use tax-free benefits for education. The GI Bill isn't just powerful, it's tax-free. Scholarships and grants are also non-taxable. But be mindful, if your tuition is fully covered, you can't double dip with deductions for the same expenses. Tip number 8, claim the disabled veteran property tax exemption. Property tax exemptions can save you thousands annually. States like Texas, Florida, and Virginia offer full exemptions for 100% disability ratings. New for 2025, though, Nevada expanded its partial exemptions, giving more relief to those with lower rating. These tax tips are just the beginning. What if I told you that there are online skills that can help you earn more in 2025? I'll walk you through the top 5 right here.